good afternoon, and welcome to NCIA's Industry Essentials Educational Webinars, our premier digital educational platform featuring a variety of interactive programs to provide you timely, engaging, and essential education when and where you need it most. My name is Brian Gilbert, the Deputy Director of Events here at NCIA, and I'm very excited to welcome you all to another edition of our Committee Insights program being hosted by NCIA's Banking and Financial Services Committee today. One note to our guests who are joining us for the live stream on our Facebook page at the moment, make sure to follow the short link in our video description to secure a spot in today's session directly inside the Zoom webinar platform so you don't miss out on all the interactive elements of today's programming. Now, let's get this show on the road. Today's program, entitled Are You Ready for the New Wave of Cannabis Capital, will see members of NCIA's Banking and Financial Services Committee explore the current landscape surrounding cannabis capital, how we got here, and how best to prepare for future trends. Our panel will discuss what new investors will look for and what to do in preparation for a capital raise, both in financial and behavioral terms. Most importantly, they'll be conducting Q&A with the audience throughout the session, so don't be shy and make sure to take advantage of today's opportunity to learn from these leaders in the banking and financial service sector live. Well, I know our panel is eager to dive into the conversation and our audience is interested in having their questions answered, so let's not waste any more time. To kick things off, I'd like to welcome Peter Su, the private banking and cannabis banking team leader with Dime Bank, to the virtual stage to kick things off by introducing our panel of cannabis financial experts. Welcome back to the NCIA Industry Essentials, Peter. It's great to see you today. You can take it away from here.
Thanks, Brian. Always a great intro from you. I feel like you're introducing somebody else, maybe. So thanks for having me. I'm just a moderator, so I won't be doing much talking, hopefully. My name is Peter Su. I work for Dime Community Bank. I run our cannabis banking division. I'm just going around this circle with the way I see you guys. Curtis, do you want to go first?
Sure. Thank you, Peter. Yeah, my name's Curtis Quinar. I'm a CPA with Frost PLLC. I've been in the business serving the cannabis industry since late 2011, early 2012, providing all kinds of services from assisting in structuring and tax and other advising. So I've seen quite a bit in the past 10 years, and we serve clients all over the country. So we see the different impacts on different rules of either state. So thank you for having me on here.
Great. Cliff, I see you next. I apologize.
Excellent. Good morning, everybody. Thank you for coming in, and glad to be here with Curtis Sumit, and of course you, Peter. Thank you for moderating. I seem to be doing a great job of that this year. So I've been investing in cannabis in 2014 through a private fund out of South Florida. We've been doing this since 2014 in a seed type investment, the seed stage investing. We followed that up and started with some biotech. We followed that into some current trends in investing we saw the past couple of years, and we're happy to share that with you. I'll pass it on.
That's great. And Sumit?
Peter, thank you. And hello, everyone. My name is Sumit Mehta, and I'm the founder and CEO of a firm called Mazzucchelli, effectively a fintech platform that allows for companies to raise capital and investors to place capital, surrounded by a broker-dealer and an RIA. In terms of personal background, I spent 20 years on Wall Street before coming into the cannabis industry in 2013. Starting my career at Merrill Lynch in 1996, ending it at JP Morgan in 2016. My arrival into the cannabis industry was purely as an investor in 2013, and by 2016, I realized that money wasn't enough, time and energy were also imperative. And with that epiphany, I jumped in with both feet, founding Mazzucchelli and also working with the NCIA and other companies, advising and consulting on most things that would generally be described as strategic or financial. Thanks again, Peter, and look forward to a spirited discussion here today.
This is a great panel. We have a lot of great experience here, guys. And not to get confusing, but I'm going to introduce our missing panelist. Deborah Johnson is the Director of Business Development for NCIA Accounting Solutions. She has tremendous experience in investor relationships through ArcView, and she's now with, again, with NCIA Accounting Solutions. But again, we got a great panel here, and why don't we just kick this off? So guys, maybe we could start with a round robin for everybody here. You know, as cannabis companies grow, how do they get ready for a new type of investor? So if you guys don't mind, I'll just do it backwards. Sumit, why don't you tackle that first?
Sure. I think getting ready for any investor involves a series of steps that I can best describe with an analogy, which is selling your house. And selling a piece of your company is no different than selling your house. You want to do three main things when you sell your house. Those are: one, getting your paperwork in order; two, cleaning up your house and making it look nice; and three, inviting as many people to your open house or to a showing as possible. Translating that into a company's preparation journey, all three steps are extremely valid. For companies that want to prepare for any investor, especially a new type of investor, it is important and imperative to have all of your paperwork in order. This means a polished deck, a full set of financials, an accurate set of historical financials, as well as a forward-looking pro forma, all of your subscription documents in a neat and tidy data room, which an investor can then browse without losing your brand and the brand image that you're creating in this investor's mind. The latter portion of this, the data room itself, is akin to cleaning up your house and making it look nice. Folks are spending a lot more time on Zoom as we are, which means that folks are more attentive to a video than they have been in the past. I've seen companies be successful simply because they had an amazing pitch video that were not successful without it, because it attracted investors' attention, not just their curiosity. And lastly, inviting as many people to your open house as possible is akin to having as many people arrive at your data room as possible. This means a large number of invitations, reminders, invites that go out to a broad set of potential investors in a way that incents those investors to click through and spend time on your data room. To wrap this up, if you can get your paperwork in order, if you can package it into a form that is aesthetically pleasing to investors, and if you can get a large number of eyeballs on that package, you maximize your chances of raising capital from any kind of investor, especially a new kind.
Very cool. Cliff, what do you think about that? The question again is, as cannabis companies grow, how do they get ready for a new type of investor?
Great, thank you very much. I'll try not to trip on that one as much as I did before. You know, I think Sumit really hit on a lot of key points of getting certain things in order, getting them cleaned up and prepared to show, getting rid of a lot of noise. This is a very tough industry, and I think the new investors, as they come in, are not going to be used to some of the noise that is out there. You know, lots of us and most people on this call today, we're entrenched in the industry. We know what's going on. So a new player in the industry, especially a financial player, I think they're probably going to be pretty sophisticated at this point. They're going to be susceptible to a lot of the noise in the industry. We all know it, whether it's new technology, current regulations, jurisdictional challenges. It's just a lot out there. Sumit's claim to documents and getting that in order first really will help those noises go away, get your attention on your documents and your project and your fundraise. So I do think that's a really big step. And I would follow the sophistication of that up as far as you can take it. I think at this point, when the new round of investors comes in, there's going to be a little bit more advanced. Some of the hot trends are probably gone, and to have financials that'll match your customer and match the eyeballs you want on them. So really a technical analysis, a little deeper dive, better documents, better prepared for more sophistication. I think that's a good direction to go.
That's great. And Curtis, what do you think?
There's not really a whole lot to add to this.
I set you up on that. You went last.
Really, I know. Really, well, that's all right. That's all right. You know, I get clients coming to visit us just because of some of the advice, such as these, to make sure that their financials and their paperwork are in order. That you know, the financials match what tax returns would be that their sales reports have in the state if they've already been operating for a while, say if they're a dispensary or cultivator. So there's not a whole lot I can add, but great points.
Sumi, let me ask you, I apologize, I know I'm going off script here, but you mentioned, get as many people as you can to your open house. Now, is that always a good thing, right? Like how much vetting do you do, or should a person do of their investors? Or are you saying, hey, have an open house and bring as many people as you can?
Those are two questions, Peter. How much vetting do we do, and how much vetting should a company do? And I'll answer both. We work through a licensed broker dealer.
Okay.
If you're getting an investment from someone who is investing their own money, they're free to do whatever they want with it. The second someone is investing someone else's money, they have a fiduciary responsibility to the investor to effectively utilize a registered and licensed channel for that capital placement. So if we're talking about an institutional capital source, such as a dedicated cannabis fund, then you are going to want to have a licensed channel to approach that fund through. That means you need to have a registered broker dealer. You need to have a licensed investment banker. One of the things that we do as licensed investment bankers that work through a registered broker dealer is vet both the issuer as well as the investor. We work with the SEC, we work with FINRA, and we work with FinCEN. And that means we have to be very compliant with all three guidelines from all three institutions, including the anti-money laundering guideline. That requires a KYC, which is Know Your Customer, which involves us vetting every single investor that comes into any one of the deals that we offer. So the answer to your question, the first part of your question, what do we do to vet investors? We go through background checks, we do credit checks, we get government issued IDs, and we build a file that is then filed with the broker dealer and with FinCEN to get the proper approvals to even allow an investor to invest in one of our companies. The second part of your question is a much shorter answer. What should companies do? My opinion, companies should pay attention very carefully to who they allow onto their cap table, because an investment is not the conclusion of a transaction, it is the beginning of a relationship. And quite often, companies can lean on their current investors for additional capital infusions as they grow and as their opportunity set grows. So it's important to maintain good relationships, and just as you would with any relationship, be careful who you start that with.
Okay, yeah, those are very good points. Cliff, let me ask you. So I think there's a lot of this talk that like now, especially with cannabis sort of, getting hot and it's attracting new investors. I mean, do you think that's true? Is there a new wave? And what do you think happens? Are people going to be left behind? Are there ripple effects to that?
Well, I think there will be, there's always ripple effects to everything. So, as we move forward and new sources of capital for the industry open up and certain kind of go by the wayside, surely there'll be effects there. I think in the past cycle of cannabis, we've really seen early cannabis investors coming up through 2012, some of the early recreational states in Colorado, saw the early Pacific Northwest trend. So some of those early investors were had high risk capital to place, a lot of single investors, family offices, and people who had some liberties to invest. Sumit and broker dealer channel, for certain reasons, and Sumit can most certainly highlight these, were kept out for some of those early investments. As cannabis kind of evolved, we still had that, and that's a great angel base. It's still out there, still active, but you started to see more sophisticated investment strategies and investors come along. There's several funds were developed over time. We saw a great rush into some pre-IPO markets with lots of deals. That's probably transitioned to the SPAC craze we see today, probably an evolution right there. And from there, we saw Europeans, that whole wave happen. And then, of course, a big public market letdown in the last couple of years. And now we're at a point where we're starting to see new legislation come on, new states, new jurisdictions open up. So I really see two waves of new capital coming to market. As we open up, if we get broached that regulation, that federal regulation topic, institutional money may open up. It could spark a new wave, and that's going to be great for people who are executing, people who have come through the ranks and are in a position to absorb that much capital and can handle that much due diligence. So that's definitely a prime source, and I see that coming. And I think companies who are wanting to take advantage of that, really now's the time to tighten up and be prepared for it. That's why we're here. I see a second wave of capital coming, kind of a regression to the early days. I was out here in lovely Sedona talking with some people at a good event, and it occurred to me that as new places come online and new jurisdictions pop up, I'm going to use New York as a prime example. It's a great, vibrant city. Cannabis has just passed, and lots of things happening there. It's my thought that of the whole population of Manhattan, how many nice high-rise and sophisticated people live there who are smart angel investors? Of those groups, how many are going to now be open to that small micro businesses in New York and Manhattan? And I do think we're going to see a new wave of small angel investors coming to support some of those grassroots companies coming up. So I think it's going to be a little bit of bifurcation, a new round of investors who are putting small money in small startups. They might be a little bit more naive and lean on people like us who have some experience. And then a big round of institutional capital that's going to gear up. I think that's where you have to be affiliated as a company looking to navigate this with people like Sumit, people like Curtis, who have that expertise. And so that's where the two new waves of capital that I see. I'd love to hear what anyone else has to observations.
I think that's really interesting. You know, I'm sorry, if you don't mind, I'm going to take the direction a little bit differently. So Curtis, thinking about new wave of money, I mean, I think that now you're starting to hear more talks about, like, you know, traditional financing, right? Banks. So from especially with 280E considerations, what are your thoughts on, you know, banks now maybe jumping in and providing financing? So for example, can they deduct their interest on their loans?
Yeah, so there are, and you know, the way things have changed over the years, I'll say, you know, Cliff was right on with the risk base earlier on. There were a lot more private loans going into businesses at high rates, 25, 35%, you know. And just a quick background, I came out of Colorado and really was starting out in around 2012. So that's my base. And you've been seeing these loans come down in interest, and you're starting to see more banks offering lending to many of these businesses. But on top of that, you know, there are things to consider if you think about 280E, that if your entity is complying with 280E, interest is not necessarily deductible. So when you're looking at debt financing, you might want to consider taking that loan out personally, investing it maybe on equity yourself, and it's not with the entity for it. So 280E does have an impact on what you can deduct if you're doing that, and interest would not be something that you could. So think about that in your cost of equity or your cost of financing and what you're doing, and get with somebody who might understand some of the impacts of there, because it does cost you more if you can't deduct that interest.
Sorry, I was on mute. Still, after a year and a half of Zoom, still don't have it quite figured out yet. Assume it. You know, this is a topic that should be near and dear to your heart, right? So what do you think about this new wave of capital? Is it true? Is there a new wave of capital?
Certainly is a new wave of capital, and there are several reasons why. Rather than talk about the channels of capital, which I'm happy to address, Peter, in now or later in this conversation, I think it's important to highlight why capital is coming into the industry. And in order, in the last 12 months, we have seen the number of states that have legalized cross 30, or 60% of total states. We have seen both presidential and vice presidential, when they were candidates, talk about legalization and decriminalization in their pre-election debates. We have seen this industry go from one you weren't proud to be associated with in the general public because of the stigma associated with it, to one that was deemed essential. And we have seen now a large increase in capital that is just in general being sent out into the world. It's ought to be no surprise to this panel, and perhaps no secret to anyone in the audience. We've printed more dollars in the last 18 months than we've printed in the last 245 years. So when you flood the market with M2 or money supply, you're going to have asset inflation, the likes of which we have not seen perhaps since the last tech.com boom in late '99. The reason I'm mentioning this is because cannabis emerges as a high growth and non-correlated asset class that has a place on any portfolio as an adequate hedge to the rising public markets. And when you combine the 60% barrier crossing, you think about the highest ranked politicians in our country talking about cannabis. You look at an essential non-correlated asset class, you're going to naturally attract a healthy amount of capital, especially as the likes of New York, which is the financial center of this country, are moving to legalize.
That's great. Well, so you touched on it. So let's go there. What are these channels of capital that you're referring to?
I'll highlight three channels. Two were born after Obama signed the Jobs Act in 2015, and they're SEC regulated channels. One is Regulation CF, the other is Regulation A+. Regulation CF or Reg CF ought to be fairly well known in this audience. CF stands for crowdfunding. So you now have the ability to raise capital from the retail investor through crowdfunding platforms that you didn't prior to 2016. The likes of these platforms have massively surged in popularity as people are sitting at home. They are more comfortable investing online. And as a correlation to this, that's a negative correlation, the sports industry has been effectively closed through COVID, which means sports betting is down. The second channel is Reg A+, which is a channel that was also introduced in late 2015. It allows for companies to raise up to $75 million a year, also from retail investors. It's a little more involved as a process, but certainly a very vibrant channel that has surged in popularity. And we've seen a recent example of a company raising a very healthy amount of capital in a very short amount of time as just one of many examples that show how successful this channel is. The third is something that Cliff mentioned, which is the SPAC channel. And if I look at IPO markets since 2016, 40% of all IPOs have been SPACs. To Cliff's point about SPACs gaining in popularity, year-to-date IPOs, 76% have been SPACs. There are lots of SPACs in cannabis that on average need to deploy $180 million. So while the crowdfunding channel limits your raise at 5 million, Reg A+ limits it at 75 million, and the SPAC channel limits it, or it doesn't limit it, but on average right now, we have 180 million per SPAC available. You're seeing all three channels on fire and lots of companies benefiting from taking advantage of this fire.
That's great. Cliff, jump in here on that question. What are your thoughts on these channels of capital? And, is there a right way, a wrong way? Is there such thing as the kind of money you shouldn't take?
Kind of money you shouldn't take. I think in this industry, we all need to be very aware of that. There's definitely the KYC, know your customer forms. So, so that's kind of a loaded question there. I think that the money that a company chooses to take needs to really be suited to where that company is in its lifestyle. I think that there's a good base of investors and capital that's available not at each of those lifestyles, but I think there's some early stage money that will suit you better and some late stage money that'll have the higher volumes and the structure that you're able to deal with. So right now, I do think that there is going to be a solid supply of early stage capital. whether through individuals, venture groups, the classic SPV. I think those will be around and those will survive. And whether that's a new wave or just a replenishment of the classic cannabis investor, that remains to be seen. But some of the new things coming on, I think that Sumit mentioned the investment strategy with SPACs. We touched on that. I do think they're good. There's definitely some particularities there, and we'll see how that wave plays out. But it is definitely a source, and we have seen some successful applications in the cannabis industry for sure. Even further, once the big wave comes in, a lot of people don't really put a grasp on the amount of the investment world that's controlled at an institutional level. These are bundles of capital that may be fund capital, pension capital. These are deep managers that have to comply with the strictest regulations. And so if companies can model themselves for each of those stages, that's great. An early stage investor might be ready to place minimal capital, maybe $1 million, maybe less. If you're looking for much larger capital, you're going to have to be ready for that investment banking due diligence period. You're going to have all of the financials that Sumit mentioned and Curtis has prepared in the past, but you're also going to be prepared to behave like a individual in a banker's environment. You need to have quality individuals, losing some of the habits that an early stage investor can get away with. And I think that putting that whole package together and being ready for each stage, whether that's starting off with an early seed round or a convertible note just to get into early fundraising rounds. Now your documents are ready. Deborah and I actually put a 3-part blog together on that. I recommend people kind of go back through and check it out. But this new money, once that institutional money gets in, when some of these companies can really pass a clinical due diligence, you're going to see quite a bit of movement, I think.
So let's talk a little bit about legislation. Curtis, what are your thoughts on safe banking vis-a-vis this subject, right? Capital raising or financing, things like that.
Yeah, well, the Safe Banking Act, if it ends up coming through and passing, will eventually open up more options for traditional financing. And I think it's hopeful, and I don't think it's in this most recent act coming through Congress, of how it's going to address the social equity programs that are being put in place in all the states. We're talking a lot about a lot of capital being raised for a lot of companies, but all these states coming on are addressing the social equity component of it, and they're really trying to be careful on how the structures are going to be formed for these entities that win these licenses under the social equity programs. As they currently are, I see in other states that depending on how we're getting some funding to these groups, states are becoming more and more, they're acknowledging more and more that while the social equity component has been in place for getting a license, the money that really flows in there are being controlled by those that are not fitting within that social equity program. I think if the Safe Banking Act comes into place, you might find more options for that. But I'm also finding outside the Safe Banking Act that some that with the licenses that are there are providing investment dollars to some that fit in the social equity program that get paid back so they can be true owners in there. So we're seeing an evolution there. But I think if it's addressed more in the Safe Banking Act, you'll find that you might have more programs to help fund these companies that have won licenses and to fit within this social equity programs that the states are trying to keep in place.
Now, Cliff and Sumit, I'd like to hear both your thoughts on that. Like, do you think there's anything sort of, I mean, safe banking seems to be the only thing that's kind of out there on the immediate horizon. I mean, do you see any, in your particular realm of capital raising, do you think that would have any impact or not really? Like perhaps more larger institutional investors, perhaps? Or? Sumit,
well, I think that
sorry, go ahead.
Go ahead, Sumit.
Well, yours, Cliff.
I think
short
that
answer, please finish.
I think the Safe Banking Act is it's going to get tagged on. It's been passed through a couple different layers of legislation, and I think it's going to continue to go on. I think that some of the earlier article pieces that NCIA has done on that particular piece of legislation is really good and shows how it's really going to help the industry, but also some of its limitations. So I encourage our viewers to go back if they really want to dive into that. There's some great articles on the NCIA normal channels. I do think the main, one of the main pushes for that bill is to get a true cannabis legislation through a national lawmaking process. That will open the floodgates to some of these new proposals that we see out of leadership right now. Although we haven't seen much out of the White House, and please forgive me, I am not the expert here, but from my limited access that we don't see very much from the White House that I've been too excited about. I know in the Senate leadership, I've heard some rumblings of some activity as far as putting ideas forward, and hopefully that'll turn into some proposals and move through the right channels. But I do think as that frees up, those conversations are now being had to much more receptive ears, on much more real levels, and stand a greater chance. Do I think in the end we'll get full reform? I think that's going to take a while, but I think the industry and the regulations that are on board right now are going to provide that access.
Very good. And Sumit, what do you think?
I think every step helps because the government is talking out of both sides of their mouth. On one hand, the IRS is happy to take your taxes. On the other hand, they don't let banks take your money. So as the federal government, which is a giant elephant, wakes up, it's not sufficient for the government itself or Congress to pass policy. It is also necessary for and you can throw whatever else you want into this acronym soup, but the DHS, the FDA, the DEA, the IRS, the CBP, and the list continues for all these agencies to figure out how to deal with us as an industry. So yes, the Safe Banking Act helps. Every step helps. We have a long ways to go. We've come a long ways, but we're nowhere close to the end of that journey. There are roughly 400 financial institutions that are banking cannabis out of 10,500 in the country. And that gives you a perspective for what the 97% of the industry can do to catch up with what we all need in our businesses.
Right. Very true. You know, I think it's interesting. Someone had mentioned recently that they use the term death by agency, right? So sure, you pass the legislation, but then it starts to trickle down into the DEAs and the FDAs, and then things take funny turns. It's like if you remember when the DEA had that proposed, you know, work in progress, where, you know, if you were, let's say you were driving CBD, that was a controlled substance, for example. Like those are the kind of examples that, like, you know, unintended consequences kind of. So let me ask you guys, we're all veterans. You guys are veterans of the industry. You've been through multiple investments, cap raises. I mean, there's this funny saying, right? People always say, if I knew then what I know now. So let's do it. Well, here's your chance. If you went back to the, you know, 5 years ago, what do you think is the one lesson that you would learn? And you know, I guess I'll go around again. Curtis, what do you think? Like, imagine you were sitting down with, you know, an accountant entering the space from when you first started. Like, what are some lessons you think you've learned here? Again, with respect to the topic here, capital.
With the respect to capital, I mean, early on, I'm risk averse as an accountant. So there were always the risks that we're looking at in there. And I think I probably dissuaded some people from investing in some where they were in their life. But again, that's trying to make sure that they were making the right decision for themselves. But you know, I think some of these states that you didn't know where they were going to land, and I'm talking 2012, 2013, and getting into the space, and how it was going to change in the social aspects of it. I think I was more risk averse in advising to it than I am today. And so it's an easier thing to advise somebody on what to invest in and what states and what regulations are there and how they're taking capital too. When I was watching clients take debt for 35%, that, how are you going to pay for that? And
Right.
you're going to get it. So we have some numbers now, and I think it's easier for me to provide a better opinion on it. And I mean, that's kind of where I am now, and I can look at what states and I have more data, and there's more options for capital out there. So that's kind of my main, where I was as an accountant.
Understood. Cliff, what do you think? What's a lesson you would give to the starting Cliff today?
Well, I mean, we do quite a bit of diverse activities in our house, and how we behave day to day. But if someone's trying to be involved in the cannabis and either investing or trying to raise capital, I think you really just need to drill down and make sure, take an assessment of where you're at and try and figure out what noise is there and what's really distracting you, and what's happening in the space that you're immediately in. Are you in a beautiful grow, or are you surrounded by stainless steel, or are you in an office? Where are you at? All of those things have certain levels of distraction and noise. The more of that you can kind of get rid of and not pay attention to, the more you can dive into the real business elements. I think that's a big thing, and it's very tricky in cannabis, especially in startups and young companies. If you're trying to remove the noise of the industry and the flashy lights, but you still need to know and pay enough attention to the founders and how they behave and their drives. Are they, executing on what they said they should be? What milestones they're crossing? Great. Keep that investment going. Help them as you can and give them good advice. But you still need to drive down and try and still eliminate some of those, the excess noise, the different levels of accounting. Curtis, I'm sure you've gotten books where it's just, Canna Gap accounting with it's almost right, but once you get a real accountant in there to drill down on it, it gets to be a different picture.
And
So
again,
I think that's what people really need to know. Yeah, avoid the noise. And you're going to have companies once you're more successful as a company raising money, you're going to have groups that will completely eliminate noise by looking at numbers, by looking at mathematical algorithms and things of that nature. And that's really when you need to be dialed in.
Yeah.
Founder activity and behavior does matter quite a bit. I think somebody mentioned M&A. When two companies merge, it's they get the books pretty quick. Output happens pretty quick. Those companies survive, and where they collapse, that's on a culture thing. So you have to look at the whole process there. Try and eliminate noise, but don't be too cold. That would be my advice.
That's great. So Sumit, what about you? What's your advice for baby Sumit?
I think I would speak more loudly about the fact that the only thing that Canada has been successful growing in its history is hockey players. And the flood of capital that caused the Canadian, now historic Canadian cannabis bubble could potentially have been avoided if more people had heeded that advice. The one other thing I'll say, Peter, to my younger self is that projections are guaranteed to be wrong. The question is by how much, and paying attention to what we put into our assumptions has a giant impact on what we get as an outcome of our investments.
That's great. These are great advice. So guys, I was going to do Q&A, but it turns out Sumit banged them all out.
Well, Curtis had a couple that he was going to answer live, so maybe we can go get pick his brain.
Yeah, and I got kind of confused on how to answer those live. So I'm going back and answering some, typing them in. So I think when I hit answer live, and then I was going to address it there. So that's a user error on my side. And here I've typed in a couple answers to her right now.
Well, audience members, don't hesitate to post some additional questions. I know a few people have posted them inside the chat room as we've been going along. So if any of you haven't seen those or haven't gotten those transferred to the Q&A board specifically, feel free to post them in here in the chat room. I know we've got a huge room here, so don't be shy, people. I know that Sumit's been doing a fantastic job banging those questions out on the Q&A board. So feel free to post some more questions in the chat room while we're trying to fill some time here and get some additional feedback and interaction from the audience.
Today I learned that Sumit is a very fast typer and types very quietly.
Yes.
You didn't even realize he blew through them.
He was like, he's still looking at the camera and somehow he's banging out these questions.
And it looks like just Brooke posted a question. I think this was one that didn't get retransferred over into the Q&A board that we got here in the chat room. So have we addressed the question that was, what are some of the best ways to evaluate startup retail cannabis company prior to the doors being open? And if we haven't addressed it, anybody can feel free to just take it and run with it from there. And I see a few more getting posted into the chat room as well, Peter, so we can dive into those next.
I mean,
Okay.
I could tell you a couple of things I see in these emerging markets that that are there. You know, a lot of these in the Midwest, they're really looking at a lot of the barriers to entry. If they're medical, it goes in. We addressed it. I addressed it into another question, but you know, when you have a limited license market and starts off as medical, some of them are, you know, location is important. There's no doubt. If it's like a dispensary operation, location and population, number of dispensaries that are out there, it's going to all matter. So you can look at states like Oklahoma. Clearly, they're going to have a significantly different valuation than limited license states that are just coming on, such as Missouri and Arkansas, and what's going to be coming on with Louisiana. I'm seeing a lot of my clients investing in those spaces and what they're doing in their investments and what the value they're placing on it in that space in their cap tables. So there's a lot of movement that's going in on there. There's a lot of expectation what the price is going to be. There's a lot of range and a lot of data out there now for states such as, you know, Colorado and California, Oklahoma prices, and how it's going to translate to the number of licenses and the population that you're going to see there. So you can get valuations pre-opening, and we're seeing transactions of just licenses going through there and seeing what the values of those licenses are.
Yeah, you know, I think valuation can be a very tough thing. I mean, from a banking perspective, right? So sometimes we get these, let's say it's a commercial real estate, somebody's got an indoor grow somewhere and they say, well, this building's worth 20 million bucks. And I say, well, you know, it's a warehouse. it's worth 20 million bucks because because of all the equipment and the license and stuff like that. But you know, it's a single use, special use, single tenant. I mean, it's probably worth $1 million, you know. All right, so we do actually have some Q&A. I
think the valuation question, I think that valuation question is worth kind of looking at. A couple of people have asked about it in the Q&A here.
Yeah.
You know, I think when you're starting a business and you're pre-revenue, you know, you have to look to some of the things that you're doing right, the things that you're doing wrong, and everyone else around you. If you're opening up a retail spot in a limited license state, it's much different than if you're doing it in a free access state. But that's what's going to be in your market. That's why you have to look to your neighbor or others in your local area. You know, as you put your project together, you know, you need to address what milestones you're hitting on. What are you telling people you're going to do versus what are you doing? And that'll help people understand your future projections. It's all about how many people you can move through your a retail place. There's a lot of great branding opportunities, a lot of ancillary things, but you really need to hone in on your execution and you need to find partners who understand you're at that business level. You do not want to bring on a nice fat capital stack if they think you are something you're not, and they're going to have very grumpy conversations in the very near future. You need to accept capital from people who understand where you're at and can help you in that structure. So that valuation will come, but it's going to take a lot more than just your balance sheet when your balance sheet isn't strong enough. So.
That's good. Well, so Sumit, this sounds like a hot topic. What are your thoughts on valuation? Especially, that sounds like the question was very specific. So pre-operation, right? Like, how do you evaluate that business?
Thanks, Peter. We work with a lot of companies and have worked on valuations for 8 years as bankers in this industry. And while there are many ways to value a business, the four most common methods are comparable valuation, a precedent valuation, a multiple analysis, and a discounted cash flow valuation. In the case of a pre-revenue company, there is no multiple analysis to do, which leaves us with three methodologies that I would employ to triangulate back into a defensible range for valuation. Keeping in mind that a valuation is simply a suggestion that moves not only with a mathematical analysis, but also with sentiment and where investor mindsets are. The way that we have worked on valuation is to produce a range, again, from triangulating back with several methodologies, so that we can begin a conversation with investors. And ultimately, the value is going to end up where the seller and buyer agree to meet. That's how I would approach valuation, specifically for a pre-revenue startup.
You
I think you're muted, Peter.
If you're looking for me to address it, because I was typing some answers.
Yep. Sorry, I was muted. I apologize. So, there's this question here that I think is really interesting. If your goal is to be acquired, would one employ a different strategy to attract investment? So yeah, let's go around the horn on that. What do you guys think about that? Curtis.
What was that question one more time? I was answering in the mode.
Oh, sorry. If your goal is to be acquired, would you employ a different strategy in terms of attracting investment?
What kind of, where are you in this space? What kind of entity are you? Cultivation, vertical, dispensary, what are your goals? I think it depends. It's not as, there's not a one answer for everything. If your goal is to, we had some early guys that their whole goal was getting as big as they can, as fast as they can, to get acquired by a big operation.
Right.
They're still not quite there, and this is, I'm not going to mention the state or anything, but they operate in a state and they're a very large operator in the state. But they'll eventually get there, especially with what we're seeing in the M&A space right now. But there are some issues that have come up in due diligence that you have to be careful with, and that's certain things with tax compliance. Actually, that's holding up a deal. From my perspective, it depends on what you have, where you are, what state you're in, because that's going to all affect it.
What do you think? If my goal is to be acquired, does that change anything in terms of how my strategy should be in terms of attracting investment?
Yeah, I definitely think it is. If I think Curtis touched on something. The structure of your business that does make a big difference. Does your acquisition model simply mean an asset sale? Right? Is it a company sale? Have you developed a single piece of IP you want to merge in? What you have to take a true inventory of what you have as far as your business goes. I think some of these things you need to look for a little bit ahead of time. The IRS can be a little grumpy if you suddenly file for a Delaware C Corp conversion and make a change of ownership very quickly. You need to have some time pass there for them to be sensitive to certain things. So that's where the counsel and some of those things go. I think if you're really wanting to be merged, and set up to be building a company for an exit, again, there are some particular niches, but we see most of those big mergers have more problems around the culture than the actual merger itself. So it might be worth putting some attention there, making sure that your policies and some of your some of the things you overlook in your day-to-day, some of that core business activities that aren't quite as flashy, make sure those are up to speed, and make sure that you have something that's built to be attached, not something that is built to stand alone. So it definitely takes a lot of consideration. But the bottom line is, if you build a company that's successful and it's for you, and you do it for the right reasons, and it's positive, the acquisition that you might see on your table will happen and be a good thing. So it is a strategy to build for sale, build for merger, but solid operators get acquired as well.
Right. And Sumit, what do you think?
Why are you getting acquired, and who is acquiring you? I'm either acquiring a company because I think it's a great investment and I want to keep the management team in place and let it run, or I'm acquiring the company to get the management team out of there because I think I can do a better job than they're doing.
Okay.
And if you are a manager of a business that is being dressed up for sale, you want to effectively have a different response to each one of those buyers. Some of the low-hanging fruit of this answer, Peter, is don't cloud your cap table, keep your books clean. Some of the housekeeping stuff that I think we've pointed out that's just essential in any business, especially one that is being looked at by either an investor or an intended operator. It's easier to get more specific when I look at specific situations, but I would just high level provide those as part of the answer.
That's great. This is. I feel like we've covered a lot and we've thrown out some good information. Guys, I'm getting the 5-minute warning here, so maybe a quick closing opinions if anybody has anything to say. Sumit, you want to start? Any closing thoughts?
This is a phenomenal industry. It's extremely exciting. We're at an extremely exciting time in the industry. We're at somewhat of an inflection point, given a lot of the reasons we mentioned that cannabis capital has arrived in a pretty big way. I'll leave the folks in the audience with one thought, especially as we're talking about attracting capital. We provide knowledge, we provide access, and therefore we attract people that have capital and interest that are lacking the latter two. One of our funding partners is a $20 million facility, and we're helping them deploy this capital into the industry. We look at the industry in 5 segments. Those are real estate, hemp, ancillary, plant touching, and international. And we've built, because of the response we got to our press release, an application form on our website. So any company that's looking for capital that thinks they qualify, and the qualifications are also listed on our website, I would encourage you to apply for funding by clicking on the apply for funding link at mazzucchelli.com. Appreciate everyone's attendance here, and Peter and my fellow panelists, thank you for a spirited discussion.
Cliff, closing thoughts? Cliff? Oh. Curtis, closing thoughts.
Great.
Oh,
thank you very much.
No, go ahead, Cliff.
If I'm going, you just give me a hands up, Peter. It looks like I've got an unstable link here for some final thoughts. I'm just going to run a simple analogy up the curve of investing, from seed investing all the way through to institutional capital coming in. Those investors will look for particular things. Those entrepreneurs at those levels should realize that the younger you are as a company, the more you're going on story and shiny lights, the more noise you're going to have to navigate, and the more problems that you will be simply unforeseen. As an investor, you need to realize that. As you move up through your rounds of capital, you can get better things, and less noise will be there. And that's where the documents, and that's where that great help comes in. So I hope everyone has great funding at all of those rounds, and hear what Curtis has to say.
Thank you, Cliff, and thank you, everybody. I'd say, this industry, for as long as I've been in it, and what I see in the future is just ever evolving. It's ever evolving in what's happening with capital raise. It's ever evolving what's happening in valuations. In 2019, we saw some declines in certain markets. beginning in 2000, probably 2020 in March, the pandemic really started to hit some of those markets and turning those around depending on what the state rules were and laws were. Debt capital is cheap right now, so you're seeing a lot of money going into it. But it's ever evolving. Understand what's going on within the states that are there, within these markets that you're in, because I see differences, a lot of differences in all of them. But it's an exciting market, and we're going to see changes in this market and consolidation for decades to come. And it's exciting to be in. So if you're in it or you're looking to be in it, continue to just do your homework and watch what the markets are doing, talk to people who are out there. And it's a fun place to be. And you don't see, it's a market where public market data doesn't necessarily dictate everything that's going on in the private market, but it's enjoyable to watch.
Right. All right, guys, thank you so much.
Well, thank you, Peter, as always, for leading such a spirited and great conversation amongst this panel. I really appreciate your work over the last few weeks helping moderate these two sessions that the Banking and Financial Services Committee has done such a fantastic job putting together for and presenting to our audience. I know today's discussion was one that was of really a lot of interest over amongst our network over the last 3 days. So a huge thank you to all of our audience members as well for signing up and securing their spot inside the Zoom platform so that we could have such an interactive program today. I don't think that I've seen such active Q&A, both from the audience and the panelist side over the last few months. So Sumit, I really appreciate all of your active participation and interaction with the audience members as well. As they just noted, we are getting close to the allotted hour. Some of our panelists do have some other pressing engagements that they have to run off to. So I think they're going to leave the virtual stage. So I'd love to lead the audience in a virtual round of applause. If you enjoyed today's session, please raise your hand in the audience pool to give some feedback. Yeah, fantastic to all of our panelists. And do post inside the chat room, letting them know what your best takeaway that you took from today's fantastic discussion would be. That being said, please do stick around for the next few minutes. As always, we're going to close out today's session while we have an active room and give you all a quick teaser and preview of some upcoming programs that we'd all love your participation in, while also providing some resources for you all to follow up on today's conversation with. So as always, please do be aware that you'll receive an automated post-event email from the Zoom system. Inside that, it will contain a link to our public webinar blog. We'll have a formatted video recording of today's session posted within the next 48 hours and released to the public on NCIA's website. We'll also include a PDF of slide of today's presentation, specifically the contact information slide. I know a lot of you all are probably interested in following up with some of these amazing panelists post-session. So please don't hesitate to reach out to them and utilize all of those resources as you all see fit post-broadcast. Then additionally, for all the outstanding Q&A questions that are still open, please do note that we'll be collecting these and compiling them into a post-event discussion blog that we'll post on our website. And then additionally, we'll also carry on the conversation amongst our members inside of our members only community platform, NCIA Connect. So do stay on the lookout for a library listing of today's conversation to be posted over the next few days. And then please do head to NCIA Connect and carry on the conversation directly with all of the fantastic NCIA members on this panel and all of the ones amongst our 1,500 member business company network. All right, so let's get into the preview of upcoming sessions. Okay, so next week on Wednesday afternoon, we have a doubleheader of Committee Insights and Service Solutions program to feed your appetite for interactive educational programming in the final few months before we start returning to in-person events this fall. First up, members of NCIA's Risk Management and Insurance Committee will discuss how to evaluate and rank risk to your cannabis business next Wednesday. Our experts will discuss the potential impact of risk to cannabis business operations and how to effectively identify and rank them. The expert panelists will share insights gained from their respective areas of specialty, which include legal, financial, manufacturing, technology, and insurance. Their insights will arm our members with the tools needed to fortify their operational practices and minimize or avoid costly losses. And then additionally, later that afternoon, APPI Energy is hosting the first service solutions program this spring with their session entitled Holistic Energy Management Solutions, Comprehensive Strategies for Reducing Cost, Demand, and Increasing Sustainability and Resiliency. You won't want to miss this dynamic panel of energy experts for an in-depth session on building out an integrated infrastructure to yield a healthier environment for growth. Let these experts walk you through what it means to have a holistic approach to energy management, and you'll leave this webinar with insights into the energy markets, as well as proven technology-agnostic solutions for cannabis businesses. For all of you all that might not be aware, the Service Solutions is our sponsored content webinar program, which allows business owners and opportunities to learn more about premier products, services, and industry solutions directly from our network of established suppliers, providers, and thought leaders. As with all of our Industry Essentials educational webinars, this session, both of those taking place next Wednesday, are free for both members and non-members of NCIA to participate in live. So head to thecannabisindustry.org/events following this session to secure your spot today. All right, and with that, thank you all so much for participating in another NCIA Industry Essentials educational webinar. Huge thank you once again to the members of our panel for presenting today's session, along with all of our audience members and member business owners, which make our work possible each and every day. You'll all be directed to a quick 5-question attendee survey after the meeting room wraps up. Please do complete that, as it'll grant you immediate access to our presentation files. And then, as I noted a moment ago, please do note that all NCIA members receive exclusive 30-day access to video recordings first posted inside of our NCIA members-only platform, NCIA Connect. As always, we'll leave you all with this NCIA or end of event credit sequence highlighting the 40+ member businesses that make up our Banking and Financial Services Committee and participated in this afternoon's session. And then if you don't see your company listed, that means that you need to head to thecannabisindustry.org/join following today's session to join the movement for a responsible and equitable cannabis industry. Enjoy. Hope you all have a great rest of your week. And we look forward to seeing you all next Wednesday for that double header of webinars taking place at 1 and 3 p.m. Eastern. Thanks a lot. See you all then.